Hello, hello. Jeremiah Conjure here with Annuity Association, and we are back live bringing you the Fixed Annuity Rates Report for May 2022. It's been a few months since I've done this report. I've been very fortunate to have been pretty busy with our firm in terms of helping clients with identifying the right annuities for their particular situation. And so it's taken me away from doing these videos, but happy to have some free time here today to bring some of these annuity rates reports. So today's May 4th, 2022, and it just so happens to be the same day that the Fed has increased the interest rates, the rate hikes, 50 basis points, the highest since 2000. So in 22 years, this is the highest single rate hike that we've had. And we're really finding ourselves in some uncharted waters per se in terms of the current economic environment. We're seeing both sides of the coin, if you will, in terms of equities and bonds, both experiencing high levels of volatility. And there's a lot of people right now that are really struggling to figure out what to do. A lot of people that are in the retirement phase of their life, or maybe just about to approach that phase of their life, they're really having some concerns in regards to finding safe yield and protecting their prized assets that they hope to use to live on for the duration of their retirement. So if you're not familiar with fixed annuities, or what are also referred to as multi-year guaranteed annuities, they are the insurance company's answer to the bank certificate of deposit. So they are a safe money instrument that can be used to grow your money at a guaranteed interest rate. And they're what we refer to as time deposits. So rather than having risk in the markets, because of the protections provided by the contractual guarantees of these annuities, in exchange for that risk and the benefit of having no risk, and transferring that risk rather to the insurance company, to make things work on their end, they require that you keep the money in the account for an agreed upon amount of time. So typically, you can find these durations in the 3 to 5 year space, and they go up as high as 20 years. But most of the time, people are looking in shorter intervals, 3, 5, or maybe 7 years at the most. So we'll be sure to cover those contract terms here momentarily. Before we do that, let me go ahead and delve into our handy dandy disclaimer and make sure that we get that fun legal stuff out of the way. So if you bear with me, I'm going to go ahead and pull that up and we will get started. So bear with me here. Okay. So again, we are covering today the state of the fixed annuity market rates report for May of 2022. This is an independent review brought to you by AnnuityAssociation.com. By the way, if you're interested in working with me directly, maybe you're looking to find the highest fixed annuity rate, or maybe you're looking at an indexed annuity that can provide some growth potential as well, I'd be happy and honored to have that opportunity to work with you. You can do so by going to our website at AnnuityAssociation.com. Right there on the main page, there is a button that you can click to schedule your free consultation. Okay, so this is a review, not a recommendation to buy or sell an annuity. No insurance company has endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of AnnuityAssociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. Alrighty, so thanks for bearing with me there. Let's go ahead and take a quick dive into the 10-year Treasury as of today, May 4th of 2022. So the 10-year Treasury yield is currently hovering right around sub 3% at 2.917. So, just a short time ago, 1 year ago, as a matter of fact, it was hovering just above 1%. So we've seen a significant increase in the 10-year treasury yield, which, when it comes to insurance companies, that's a really good thing, considering that, they're investing in a lot of conservative type investments or instruments, and sometimes that involves utilizing 10-year treasuries. So in that case, you're going to see a direct correlation with these 10-year treasury yields elevating. You're going to see that the annuity rates that we're about to show you are also elevated from just a short time ago. So in addition, let's take a look at the bank CD rates for May of 2022. Now, I'm not affiliated with this website whatsoever. It's bankrate.com. They're just one that pulled up on Google for me when I simply search for the highest bank CD rates. And we'll see a 5-year offer on the table here from Merrick Bank at 2.61. Connexus Credit Union also offering around 2.6 for 5 years. A 4-year at 2.41, and then a 3-year at 2.2. So you'll see that, those rates have also elevated as well, but still nowhere near where we would hope they would be, right, when we're considering a 5-year period of time and putting in some money. But without further ado, let's go ahead and delve into the MYGAs, the multi-year guaranteed annuity report. These are also known as fixed rate annuities. And again, they are the insurance industry's equivalent or answer to the bank certificate of deposit. The main significant difference is that these insurance products, obviously being offered by insurance companies, that's really the only difference. So there is no FDIC insurance per se, but there is other safety net provisions that cover investments like these in insurance companies, and those are called the state insurance guarantee associations. And generally speaking, the coverage limits are exactly the same and sometimes even higher when it comes to annuities. So I know in our state, our home state of Florida, these fixed annuities are covered up to $300,000, whereas the FDIC covers $250,000. In addition, if you're looking to do large sums of money above and beyond that $250,000 or $300,000 coverage limit, it is wise to consider spreading out that investment premium across several different products so that you can get the coverage for all 3 or 4 different products, if you will, under different insurance companies. You'll typically going to find that majority of these insurance companies compete with one another. So we're going to see some rates that are very similar, if not exactly the same. And that's just because, it's competition. They're all competing with one another. So I have this sorted for the 3, 5, 7, and 10-year rates. So we're going to go ahead and take a look at these. So in the 3-year column, we'll see Sagicor Life Insurance Company. They're an A- rated company with their milestone MYGA coming in at 3.5% guaranteed compounded interest for a 3-year contract. So every year that you keep your money in this contract, you're going to receive 3.5% interest. And the nice thing is that this interest is compounded daily every single year for 3 years. In these annuities, you are also eligible in most cases to take withdrawals up to 10% in most of these products starting in the 2nd year of the contract. And so you'll see Sagicor's milestone MYGA includes a 10% free withdrawal provision starting in year 2. And you can take 10% of the principal and interest earned included in that 10% free withdrawal. We'll see Ocean View Life, an A- rated company as well, at 3.35% compounded interest per year for all 3 years, and as well as offering a 10% free withdrawal provision starting in year 2. And then Securian Financial rounding out the top 3, an A+ rated company at 3.25% and the 10% free withdrawal. In the 5-year space, we'll see Sagicor again comes in number 1 at 3.85%, again with the 10% free withdrawal provision. The Standard, an A-rated company at 3.7 with no withdrawal provisions. And then American Life, a B++ rated company at 3.65% with a 10% free withdrawal provision. Next, we have the 7-year term at 3.85% offered by Sagicor in their milestone MYGA. again with the 10% free withdrawal. Ocean View Life with their Harbor View MYGA at 3.8 with the 10% free withdrawal. And Investors Heritage at 3.65% with the 10% free withdrawal. And then coming in for the 10-year space, you'll see there's not a big difference, if any. Actually, there's none whatsoever in the 10-year, but I still wanted to show it just in case you're looking to compare it to the 10-year Treasury yield. You're at 3.85% offered by Ocean View, Oxford Life, an A-rated company at 3.7, and then Pacific Guardian at 3.7 as well. Oops, technical difficulties, bear with me here. So now if we're looking at considering only A+ rated or higher companies, we can definitely give you the info for that. Coming in at 3 years, we have Securian rounding out the number one spot at 3.25%, an A+ rated company. Again, 10% free withdrawal. Pacific Life, an A+ rated company as well at 3.15, and then North American with 3.15 and interest-only free withdrawals in that particular contract. Coming in on the 5-year space, we have Reliance Standard, an A++ rated company at 3.5% with a 10% free withdrawal. Mutual of Omaha at A+ at 3.5% as well with a 10% free withdrawal. And then Great American with the 3.4% with the 10% free withdrawal. In the 7-year space, we have Mutual of Omaha at 3.6 with the 10% free withdrawal. Reliance Standard at 3.5 with the 10% free withdrawal. And then Nationwide with their Nationwide Secure Growth multi-year guaranteed annuity at 3.45% with a 10% free withdrawal. And then last but not least, rounding out the 10-year column with Reliance Standard at 3.35 with a 10%. Obviously, the 10-year mark does not really make any sense in my opinion, but still wanted to show that information to you. So definitely in some interesting times. In my opinion, this is one of the most challenging economic times that we've had in recent history, just because of the fact that normally when you're looking at hedging volatility, a balanced portfolio usually consists of a portion of stocks and a portion of bonds, with the idea that bonds will offset the volatility that stocks are experiencing and vice versa. But this is one of the more challenging times because both sides of that equation are experiencing high levels of volatility, mainly due to the fact that we are in a very high inflationary period, as well as having some geopolitical risk that's being experienced with the war abroad. We're also seeing the byproducts of COVID-19 from March of 2020 starting to take effect on the economy. And then last but not least, because of the rapid inflation, we're seeing the Fed be very aggressive or start to show some signs of aggressiveness towards raising interest rates. And so when you factor all of that in, it's for a lack of better terms, it's really the perfect storm. So if you find yourself being the conservative investor, or maybe you're just looking to shift away from market volatility for a number of years until things settle, a fixed annuity or multi-year guaranteed annuity can be an ideal solution for helping somebody in that situation still grow their money at a fair rate and do so with no risk. So if I can be of any assistance, or you'd like to work with me directly on finding out more information about fixed annuities in general, you can go to our website at annuityassociation.com, and right there on the main page, you can click the green button to schedule your free virtual meeting. Actually, I believe that button is red now. So if you see a red button or green, click it, and be sure to schedule a time that's convenient for you, and we can get together on Zoom and see how we can help. So just to reiterate, we help people all over the United States. We're licensed in all 50 states to help in any way we can give some advice regarding annuities. So we'd be happy for that opportunity. Thanks for tuning in. This is Jeremiah Conger with Annuity Association signing off. Everybody have a great day and take care of one another. Thank you.